Good morning. It's Thursday, October 24th, about 6 a.m. Central Time. So overnight, the precious metals are surging with a strong recovery after yesterday's contagion sell-off amongst various asset classes, which produced a relief rally once the U.S. equity markets bottomed. Now, yesterday, I did warn you in the Metals Minute about the sell-off risks in the silver market stemming from a breakdown in the U.S. equities. We had McDonald's with the E. coli, Starbucks suspending 2025 guidance, and then finally, the blow in the U.S. equities breaking support was Apple cutting its production by about 10 million iPhones. Early in the session, silver futures were down about 20 to 30 cents, and at their lowest level in the session, they were down about $1 to $1.30 before staging a small recovery. With that being said, many of you that were working closely with me or closely with Blue Line Futures had reduced some of your positions early in the session here and repurchased those later in the sessions or broadened out the commodity exposure you had while others added to the dip. It wasn't until the after hours where Tesla delivered a blowout quarter and an upbeat 2025. That's where things really started to lift off in U.S. equities. So you have the S&P 500 about 65 points off that low. So yesterday's low on the session was 58.01, trading 58.66 last. You also have the NASDAQ futures up 184 points, making a new high on the session. Now the Dow Jones is in the red here, and the reason for that, Boeing had a satellite blow up and the labor strike lingers on. So remember, it's not just one thing when it comes to these markets, it's really everything. And these markets are global and they are macro. So looking at the overnight price action here on gold, $27.50 last, up $20. Right at about the high of the session of the overnight. Looking at the silver market, up 50 cents at 34.32. Copper futures up 3 at 4.36. Aluminum futures up 20 at 26.66. Now this is where things really start to get interesting, is platinum and palladium. And a lot of you trade those markets with us over here. So I want to spotlight on the platinum market for the moment. I think this is really interesting, and also the palladium market. So platinum at 10.50, up $20. That's a 2% move. Now, I believe that platinum and palladium are really the fuel that's lifting some of these other markets, specifically like silver and copper in the overnight session. So going to the palladium market, up $87. At one point, it was up $100 an ounce, trading at $11.51. So if you look at palladium, the palladium had surged 7% yesterday, and it's up 8% today. That the U.S. is asking the group of seven to consider sanctions against Russian exports of palladium. So Russia is the biggest producer of palladium, which is mainly used in catalytic converters in automobiles. Palladium has fallen about a third here since the start of last year. We're about 2/3 from the peak in 2024. So miners had attributed that sell-off here as just a stagnant global economy and destocking by manufacturers. So now we're seeing that these sanctions are being proposed against Russia, and specifically targeting one company. So it's Norselic Nickel. They account for 40% of the global palladium production. So this is where palladium futures could get really interesting if this type of development unfolds. So now the margin requirements on palladium, $11,550, and it's made that type of move already today, being a 100-ounce contract and swinging $100. I'm not giving you a recommendation for exposure in the palladium market. However, we might entertain looking at options that might be available in that market, similar to what we were doing yesterday in platinum and also in the silver market. So getting it back into some other things that we watch here today, the Fed watch tool, 93% chance that they cut 25 basis points, 6.9% chance that they leave rates unchanged. We do have some economic data releases coming out. The S&P 500 is going to release its manufacturing and services PMI data for October. Economists are forecasting 47.5 reading for the manufacturing and 55 for the services PMI. Those are expected to be in line with the September data. Readings above 50 suggest that there's an expansion in the sector, while below 50 indicate a contraction. So contraction in manufacturing and an increase in expansion in the services. So really since post-pandemic, that trend has been struggling in the manufacturing and thriving in the services sector. Now, if you're going to read a lot of headlines out there about news that's coming out, everyone is going to focus on the election and then also the data coming out next week. You've got everything from consumer confidence, JOLTS, ADP, GDP. You've got unemployment claims, personal income, core PCE, manufacturing PMI. You've got your non-farm payroll. So next week is going to be action-packed in those markets here, and a lot of volatility coming out. So looking at the gold market, a couple things I do want to outline. With the surge in volatility we saw yesterday, your first critical level of support is going to be about 27.17. Below that's going to be 2700. Remember, old resistance, that 2650 to 2700 price band, new support on that market. Looking at the silver market, your first level of support is going to be really a lot lower. It's going to be about 33.35. Expect the heightened volatility to be there, especially if we get any kind of big fluctuations to the downside in the equity markets, a surge in the dollar index, or a reflation of two-year treasury yields. Yields are all off in the session, the dollar's off in the session, and that's why the metals are up in this overnight session here as well. So your first level of support on silver, again, 33.35. Below that's going to be 32.81, then 32.28. And then below that will be 31.48. So we're going to start working our way a lot lower, but we do have a lot of support to come into those markets. Also 32.50, remember that was the old resistance point that we just couldn't get above, that once we broke out before that, that's where I really step in with the futures contracts. One particular option spread that many people were putting on yesterday and really identifying was for a snapback rally was the December 37.5 40 call spread for silver. Cost about 25 cents, $1,250. Max gain 10 times that, 12,500. Less what you pay for it. I wouldn't suggest holding out for that move over 40. I would suggest putting these on in pairs for most of our clients. And then what we're going to look to do is unwind one of those and have the other one as a free trade. But remember, not a formal recommendation. It's just specifically a tactic that we will most likely be implementing with some of our clients here today in the trading session. So you got any questions on futures option trading, you give me a call at 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.